Welcome to Markets Now. I'm Michelle Rook, joined by DuWayne Bosse with Bolt Marketing. And grains are mixed after a stronger opening this morning with row crops setting back. Wheat still holding on to some gains. We're mixed in cattle, higher in the hogs. And DuWayne, what happened to that early strength in corn and soybeans? It looked like we were going to see a bit of a corrective bounce, but what is the outside market negativity weighing on futures, or what's going on?
Well, I think so. You got the outside market, you got some harvest selling pressure always on every rally, it seems like, in corn and soybeans. And then you also got November option expiration coming up the end of this week. And boy, you get these big contract volume months like November for beans, December for corn, and July for corn. It seems like the market can do some pretty crazy, wild moves as they go into those option expirations. So I kind of wonder if beans didn't have that. We had the rally coming this morning, solid export number, and then we just sold off, and I haven't heard any other news. So yeah, probably watching the outside markets a little bit and those November option expirations.
Yeah, you mentioned export news, strong weekly exports. We had more business, 4 million bushels to China this morning, and then some talk of maybe some China cancellations of Brazil purchases for November. Those things should all be bullish.
They should be bullish, and they should really support the market here. Especially, that China news that Brazil, maybe they wash out of some of their purchases. I've also heard earlier in the week that Brazil's basically out of exportable soybeans right now, which is, all just trade talk, but that's what the futures market trades, is the talk. So now I'm a little bit friendly. I would say more than a little friendly, this bean market here. We got a tight situation, and, soybean meal has really taken off here lately and looks like a very strong market, very good export numbers there for the soybean meal. And we're in a tight situation in the U.S., so it's hard not to be a little bit friendly to the soybean market.
Yeah, no doubt. Corn, though, technically we busted through, or at least fell through some key moving averages yesterday in terms of support. We're still kind of in our trading range, though, aren't we?
We're in our trading range, but we broke the slow little upward trend that I had drawn on my chart too. So it is disappointing, the trade action for corn, and technically, it doesn't look the best. A week ago, we had this spike up on what I assumed was rumors that China's out there buying some of our corn. And I think the market's very disappointed this week that we haven't got any confirmation of that. We had a very good weekly export sales number, but once again, that was mainly driven by Mexico buying our corn, not China.
Yeah, I know last week you and I had talked about the run up in corn and getting up to that, 100-day moving average almost. That run up there was kind of on China business rumors. And then when we didn't get the confirmation, we've been kind of disappointed and selling off ever since, haven't we?
We have, and you mix that with probably farmers selling, last Friday and Monday, you always get a little bit more selling in the market then, and that just put pressures on the market. You're right.
Yeah, in addition to the fact that I think weather has improved a little bit in South America, at least in Argentina, right?
Yeah, it sure has. This last week in Argentina got quite a bit of rain, anywhere between a half inch in some small areas, but a lot of 1.5 inches to 3 inches before they get planting their soybean crop down there, which really should regenerate those very, very dry soils, at least get them started planting. Brazil's a little mixed bag. You got in the south, very excess moisture there, and that just continues to keep happening. But then in the north, very dry. So somewhere in the middle, it's probably perfect. But if we miss some rains this weekend in Brazil, you might start to see a little bit more of a weather premium in our soybean market here. Like I said, with our tight situation, we can't stand for a whole lot of exports to increase. Now, remember, we started the export pace so far behind that we're just catching up to the pace now. So let's not get too bold up here.
Yeah. So wheat is holding on to gains. Is that just short covering because we got oversold? I mean, we did push to some new lows in Kansas City wheat yesterday, but we also have some Ukraine headlines we could talk about too.
Yeah, we did. You're right. First off, sold off probably last couple of days on good rains headed to the southern plains. We'll get the first winter wheat crop ratings next Monday afternoon. Looking for that to be a high number in the good to excellent, probably over 50%, maybe 55%. But overnight, Ukraine all of a sudden out of the blue said they're not going to be exporting anything out of this humanitarian export channel they have that they've been working on. All of a sudden they just stopped. They said Russia's been in the area too much. Maybe they dropped a few bombs sitting in the channel, I guess, or something. So that's kind of shut down for now. That probably gave the wheat market a little bit of a perk, but for the most part, it's a little comical that these markets don't even watch the Ukraine-Russia news anymore.
Yeah. So we mentioned cattle market is mixed here this morning. We've been trying to consolidate since that really horrible chart day on Monday. Do we have all of the bearishness of the cattle on feed report absorbed in this market or digested, or what are we trading right now?
I think we Yeah, we traded that bearish cattle and feed report, right? The second largest October 1st number on record. So that was a bearish number. Placements extremely high. Of course, we've been getting questions of where these cattle come from. I thought it was tight. It's a great question. It's either maybe we imported some Canadian or Mexican calves in and they're in our feedlots, or we pulled calves forward with a great price. Both is possible. But what probably happened here, or what's important, is that's the numbers we have to trade right now. And yes, you're right. The market digested that. We sold off. I think we've digested those numbers for now. But the problem is, Michelle, now you've got a market that the funds are still very long in, and the chart looks bad, and the fundamentals aren't as bullish as they used to be. So I'm afraid we continue this downward trend as funds look to exit.
So do you think we put the high in then with what you just said?
I do. Sadly, I do. Now, we could maybe retest it in 2024 with a strong U.S. economy and demand staying there. But we got to remember, this run up in prices was very domestic here. Brazil's cattle prices stayed cheap. So did Australia. Our export demand will be very tough moving forward, especially with a strong U.S. dollar. So, I don't know. Our numbers are still tight, though. I mean, next year we can probably make a run again. But yeah, I sure think the highs are in for now. And I think we need to be hedging.
Although feeders are down over $30 off the highs here. So have they corrected enough?
$30 sounds like it's corrected enough. But
it was pretty high to start with.
There. Thank you, Michelle. That's exactly right. For all our hedgers out there, remember, we're still talking 235 feeders here. Still worth protecting those kind of profits.
No doubt. Hog market, is this just a little bit of short covering as well? We scored contract lows earlier in the week, and the fundamentals really haven't turned that much more positive here.
No, they really haven't. I mean, a little bit of news out of China overnight that their hog herd is down just a little bit year over year, but still that's a huge hog herd either way. This market has just kind of gotten boring and quiet, but we sold off, I think, a little bit too far, especially in the front month December contract. So I think this is just short covering and just a nice little technical bounce. We don't have the bullish fundamentals to make an upward trend. I think at best you go sideways here in hogs.
Yeah, you do have a over $10 discount in the December to the index, so maybe that'll hold here.
Should.
Okay. Yeah. And I think the funds have gotten out of most of their longs. So maybe that takes pressure off too, right?
Right. Exactly. Like I said, I'm not really bullish and excited the hog market, but I think we're at the low.
Okay. Thanks for joining us, DuWayne Bosse with Bolt Marketing. And that's Markets Now.